market updates as we zip around the world as usual and take you to places very, very shortly like New Zealand, that wonderful land across the ocean from where I sit to you in Tasmania, Australia, just across there somewhere. Here's New Zealand, and we'll be joined very, very shortly by Julian, who will take us through the big picture stuff and what's happening around the world in the market scene. We'll then go to Malaysia, where we'll be joined by recording. Most of the guys joining us by recordings today, because of their commitments in other places. We'll be joined by Shukri, who will talk us through the crypto market as it stands at the moment, what we should be looking for. Then we'll go to Singapore and check in with Lloyd and see what the indexes around the place are looking like. We'll then go to the US of A, again by recording, where we will have a little chat. Well, he'll chat to us, really. That will be Gordon, who will take us through his little segment of markets, in particular, the indexes that he looks at, and probably he'll have a look at a couple of currencies as well. And then, of course, I will come back and wrap the show with my little technical overview of what I see in the markets, which very, very interesting. I thought this week I do not have one of the normal flags that I put in the market that suggests to me there may be a little bit of change. I saw 4 only out of 29 currency pairs that have at least pause through the week, or at the end of the week anyway. 25 of them are carrying momentum. Interesting. Will that be a trend that continues for the next week? Good question. One of the people who have something to say about that joins me now, and we do go across the ditch and say a very, very good evening to Julian. G'day, mate. How's it going?
Hey, Geoff. How are you?
Look, I'm okay. I'm a little bit... I don't know. I'm getting educated. I'm now up to the 15th letter of the Greek alphabet, and that seems to be holding sway over the world at the moment.
Yeah, I think some days the newspapers like to find a reason for something to happen, and maybe Omicron was maybe a catalyst, but I don't think it was the reason the market was unwinding. And maybe we can have a quick look at that and just remind everybody where we came from. Look, and for those of you that have missed it on my Trader Cafe a few minutes ago, we've just spent the last 45 minutes just going through the markets and really focusing on the sentiment cycle and whereabouts in the market, in the terms of the cycle, a lot of the markets are that we normally look at, just to get a feel for where the opportunities are. And there's a couple of really interesting opportunities out there in terms of, maybe the world isn't completely horrible. Others, I'm afraid, looks like we're just starting moves rather than ending them. So it looks like it's going to be a pretty exciting 2 or 3 weeks. So, Geoff, if you'll allow me, I'll carry on talking from here and hopefully give the listeners and the viewers some of the way that I see the world right now.
Not only will I allow you, I'll nestle myself back in my comfortable chair and listen to everything you're about to inform us of. Thank you very much, Geoff.
Cool. Hey, thanks, guys. Look, I'm going to start with the screen share because this is very important. We get straight into this. First thing I want to share with you guys is this chart. This is a chart of the volatility, the VIX index on the S&P 500. Now, what you noticed about that is the huge spike in volatility we had in March of last year. What we're seeing at the moment is not really considered to be a spike. We had one in the beginning of the year. We've had a couple since then. The market's sort of moving, but really hasn't done it. So if you think volatility is pretty rough right now, you ain't seen nothing yet. There's still plenty more that can come. And I think that's really the key message I have for this in some of the markets. If we just move off looking at the volatility index to go and have a look at the S&P and what it looks like. This is, again, just to bear in mind, this is a weekly chart. You can see we've now had 2 weeks in a row down. Well, that doesn't happen very often. Normally, when we've had 2 weeks down, if you go back and look in the past on an analog basis, there's only been 1 or 2 occasions where it's got a bit more rough than that. The last time was unbelievably back in October of 2020. So more than a year ago, where we had the market declining for more than 2 weeks. However, what I want you to bear in mind is where we've come from. For those of you who've been following this market, you can see the rally. We set off earlier on in 2020 in March at 2,200. We're now up at 4,500. So it's been an amazing run for anybody in stocks. And if you go look at the NASDAQ, it's even more spectacular. What we're seeing now is you can see how that volatility is picking up. Look at the size of those bars compared to the size of the other bars. So here's what we know, right? When the market settles down is when everybody is bored of stocks and doesn't want to buy them. When the market is volatile like this, right? So what I mean by that is when the trend is over, the market goes into a trading range at the bottom, volatility comes down and it collapses, right? While we're in the trend phase of moving from one price zone to the second price zone, we see this high volatility movement, especially in the indexes. But look, let's have a look at a couple of our old friends. So here's Tesla. You can see immediately. Look, I was doing this chart with some of the folks earlier. There's the failure when it tried to reach a new high. We've had a secondary failure here. The last 3 days have been pretty sick for the old folks at Tesla, but then it is worth $1 trillion, so I'm sure they can manage. What worries me is there's a gap below, and then after that it's fresh air all the way down to about the 700 mark. So we really have to hold this major support at around about $1,000. Otherwise, we're heading for the gap. Otherwise, if we miss that as well too, and we close below that gap, we're probably looking at more significant moves. So this is not the end of a move here, right? This is maybe the start of the next big move. And maybe in this instance, it's not up, it may be down. So just bear that in mind. There is no end here. Where there may be an end is in the oil market, just in terms of, again, we're seeing significant volatility. However, when you unpick this and you look at it on a 4-hourly chart, you can see the 3 main waves of sentiment coming down to a new low, which got immediately bought on Friday or Thursday, I think it was, Friday morning. And the market actually performed quite well following that. So that major low we saw, let's call it a Thursday low, that major low we saw on Thursday for me is then signifying that maybe for the short run, the oil market has had enough going down. And bear in mind the prices we've got right now, the spread between the 1-year price, so that's the price in December of next year versus the price in December of this year, has completely collapsed. It was up at about $8 or $9. It's now trading down at about $2. Okay, so that what we call the backwardation has completely collapsed. We're not in contango yet, but I think all those risks of supply problems in the oil market have come out. So I still look at this and I go, okay, well, knowing all of that, we've had a significant sell-off. The market has relocated. I am fundamentally bullish on the oil market going forward. Is this the right time to buy? And we still know the answer to that is from a seasonal perspective. No, wrong time for seasonals. However, we've only got another 2 to 3 weeks to wait and the seasonals start to kick in. So 2 to 3 weeks is a lifetime in the oil market. For the time being, on a short-term basis, my sense is there's a potential for a bounce here, or a more extended one, taking us back towards the 74, 75 level on WTI. And obviously you can do the same numbers for Brent. You guys can look that up. And if not, if we just hover around this point, then it maybe suggests continuation to the downside and we're not finished yet. So this is how we're going to check this stuff, right? So where you see the market going sideways for a while, you then look for the moves out of that range, either up or down, to give you a clue about the future direction. I think the safest way to say all of this and describe all of this is saying you have time, if you're a buyer, pretty much in every asset market in the world now. The times when it's like, oh, I've got to buy because otherwise I run the fear of missing out. I don't think there's FOMO anymore in this market. I now think we're entering a different phase whereby capital preservation once again is becoming a very important friend. And once again, you've got to play the technical to try and find the right place and the right trade location to put some of your trades and, dare I say it, some of your investments on as well too. These are some of the things I'm seeing which are really clear right now. To me, Geoff will have more view on the currencies. I'm really struggling with getting any major opinion about currencies right now. They seem to be fluctuating with the stock market. I guess I would mention the dollar index, and maybe if we just look at that on a daily basis, and maybe even we go further and look at it on a weekly basis, which may be slightly more appropriate. This is still an uptrend on a weekly basis. However, have we gone far enough? I'm not sure. I think most of the money has been made in the dollar index now. I think from here on in it gets a bit more tricky. And again, I think we might just consolidate for 2 or 3 weeks as well too. But apart from that, folks, I can't see anything else. So in summary, stocks, I don't think we finished what we started there a couple of weeks ago in the stock markets. The oil market, I think, is looking a bit better, and maybe is going to hold into support. The currencies I'm not too sure about. And then finally, for those of you that may have missed it, right, the moves that we saw in Bitcoin and in Ethereum over the weekend have just been unbelievable. So there's the weekly chart. Look at the size of that weekly bar. It's about as big a bar as you ever get. Okay, on the dailies. One of the things I think that's really important about this, if you look at the price action, this price action has been negative now in Bitcoin for the best part of 2 to 3 weeks. So is it a surprise that we finally took out all of these support lines and just had a bit of a collapse on yesterday? I know we've hung in there today. So if you look at the 4 hourly chart, you can see how this has bounced back. We may be rolling over. If you're looking for a sell zone, this is probably the area. Use whatever techniques you've got. Maybe we retrace down to here to find out if there were real buyers at all at the 42,000 mark. But long story short, you can see from what's been happening, this has been trading poorly. And all that's happened is on Saturday, somebody's finally said, that's it, I've had enough, I'm selling. And they've created a bit of market movement. When you look at Ethereum, it's trading a little bit better, but it still doesn't trade like a great market to me. You know, we've had the sell-off. We had one, you know, we're trying hard to bounce this, then another big down day. Then we bounce it big to go back and have a look at the old highs, and then we've just thrown up and just puked straight away from there. So conclusion is Ethereum trades pretty poorly too, but it trades better than Bitcoin. And we'll see what happens over the course of the next week or two. The volatility in the cryptocurrencies is absolutely alive and kicking. If you want somewhere to go which isn't too volatile right now, I probably head to our old friend gold, which is a little boring. Above 1760, it's great. Below that, it's not very good at all. So that's my roundup of the world. And the reason why I haven't mentioned a single economic figure is it makes absolutely no difference whatsoever at the moment. Knowing what's happening to Omicron might be slightly better. Knowing that it's a worse or it's a better variant would be slightly better. But I don't think we're going to get that news on a Sunday evening. That would be a bit weird. So probably sometime next week. I think it normally takes 2 weeks for the cultures to mature to the point at which they can get a feel for it. So sometime next week we're going to know. And folks, look, maybe that will be the sign, and maybe the market will bounce. Going to new highs, I think that's a bit of a stretch. I think we've already set the pattern for the next few weeks in place. But who cares about economic fundamentals when there's all this stuff going on? And by the way, the fundamentals that have come out the last 2 weeks have almost universally been worse than people were expecting.
Mate, one thing that I find fascinating is trying to get some form of correlation or some form of guide as to how Bitcoin in particular, but the crypto market in general, it actually, does it tag on to anything?
That's a great question, Geoff. Look, I think I think there's 2 ways of looking at this. People have said to me, oh, look, Bitcoin's the new gold, right? Or cryptocurrencies are the new gold. So if you want to express the inflation view, you go and buy cryptocurrencies. Well, look, the reason why people buy gold is they buy gold as an inflation hedge and for safety. It has some of the lowest volatility in the market, even almost below the volatility on treasury bonds. So it really is considered to be very, very boring. When it trends very strongly, but most of the time it doesn't really go anywhere. And it's designed to not do anything. That's sort of the point about a safe haven, right? It's designed to not be that interesting. When I look at cryptocurrencies and see volatility of 10 or 15% in a day, I'm not considering that to be anything like a safe haven. I think it's not at all. However, I do believe that a lot of money that may have gone into the gold market has gone into cryptocurrencies on the belief that it is a safe haven and it's a protection against the great Satan of inflation, right? That seems to be going around the world, and the currency debasement that appears to be going on around the world. And maybe on that basis, there is some reason why it should then trade similarly. But to me, it's a very high beta. It's a very high risk market, and I think that it varies. Sometimes it goes up with all the stock markets. Sometimes it goes down with all the stock markets. Sometimes it goes up with all the currencies, and sometimes down with all the currencies. The short answer is, I think it does its own thing, and you trade it as a completely separate asset class with a backstop, right? With a backstop to say, hey, if the world's coming to an end, then probably cryptos will come to an end as well too, right? So I don't mean that in anything other than a melodramatic metaphorical sense. So there's a real thing that when people start to sell assets, they sell the good with the bad, and if you have a significant profit in cryptos and you're losing money elsewhere, then you start to sell everything, right, including the cryptos, just to get out. So that's when that correlation of 1 starts to hit. But until that point in time, I think that there isn't really a correlation with other markets. Maybe there is from time to time, and people sort of tag onto something, but the reality is no, not really.
Yep, very happy to leave it up to the experts and ride on their coattails. For the crypto market, I'm happy to invest in the people that trade it rather than trade it myself. I think it's a very, very difficult thing to grab hold of. But mate, thank you so much as always. Great insights, and I think maybe we're back to the sentiment cycle.
Yeah, look, it's it's really interesting. You can spot, again, I encourage everybody to go to the video I've just done. You can spot some of these patterns in the market. You can see from the headlines of what people are saying. You can recognize this. Okay, it doesn't look, 2021 will go down as being, if there is a bear market in 22, more of a global generic bear market in asset, then 2021, they'll identify the May 21, March 21 era as the time when it actually rolled over, because that's when the euphoria got to crazy levels. Just even a really simple stat, right? In the States, this year, $900 billion has been invested into the stock market in the States. That is more than the last 19 years combined. So if you want a sign of enthusiasm or fear of missing out, then that's a front and center one that you can just look at anytime you want.
Take a picture and put it in the dictionary, right?
Yeah. That is not a timing. It's not a timing trigger. It's just an overall market sentiment bias.
All right, mate. We'll let you relax for the rest of Sunday evening. What's left of it, an hour and 43 minutes in your case. Enjoy it, and we'll look forward to catching up again next week. Have a good one, mate.
Cheers, everybody. See you.
Okay, so we did see some corrections in the crypto space, and to take us through all of those, or hopefully he takes us, he probably won't go through all of them, but he'll concentrate on the major ones. Let's fly over to Malaysia now by recording and say a very, very good afternoon to Shukri.
Hey. So Bitcoin has crashed, and we're here at the fear and greed index, right? So look, it's fallen down, could go down here. Look at how it languished here before it went up again, if we remember the past. So where are we going now? That was kind of a big crash. We kind of crashed all the way down from here, almost 70 to almost 42. But is this normal? That is something I would like to ask. So let's go to plan B here. What is wrong with the plan? Okay, he's going for a run. That's good. Look at 2017. Look at the dumps that happened before it went up. There was a 29% dump before this total parabolic move up all the way to its all-time high. In 2013, because I have to change the chart here, it will take some time. It also did a dump of about 33%. Now it's 40%. There are a lot of messages from this, and let's look at what's happening to the rest of the market. Now, what I like about this is that Ethereum is performing better than Bitcoin. This is what I like. Look at that. This is Ethereum versus Bitcoin from 2017. Broke and then parabolic, broke, parabolic again, has been trying, right? And look at that. It has been trying a couple of times here. If it breaks this, Ethereum is going to go parabolic against Bitcoin, which means this could be good for the altcoins. So let's go back here to plan B. What in the world is happening? So what does he has to say? Because he is the one that did this model. So he says that, okay, the stock to flow model is still good. But for the regular model now, he is giving, okay, because he failed, right? He failed this time. So he is giving another month for this to work. Now, if this model doesn't work, it's going to be a big problem. Seriously, it's going to be a big problem because this model was also used to predict the end of the cycle in 2017, 2018. So I don't think we're going to go, we didn't meet that. I don't think we're going to go there. I think we can target about 98 to 100K. But why am I so confident? Well, Bitcoin is in the blockchain. In the blockchain, it is easier to predict things because you basically have the data to the blockchain. And to show you that, if you were in the Crypto Moon classes, you would have seen this. Voila! Nailed that crash to the day. Now I'm looking at what is being predicted for the rest of the year and also for next year. And I will get back to you next week on that. Bye for now.
Okay, my thanks to Shukri as always. Wow, what an insight he gives us into that market, and he's buoyant, isn't he? He just kind of gets it. I'm going to share screen for a tick before we go to our next presenter, which of course will be Lloyd in Singapore. Just wanted to have a quick squeeze at this chart. I'm a currency trader pretty much. In fact, I'm a currency trader full stop. And what I've noticed over the last few weeks, I'm looking at the month-to-date chart of the relative performance of the currencies versus the US dollar. Of course, the US dollar versus itself as well. And it's very, very evident. This is month-to-date December, right? We've had, what, 2 trading days in December, I think. So that's not really a good indication. But just note what currencies are down the bottom of the scale versus the US dollar and what currencies are at the top of the scale versus the US dollar. It's the same over a month period. And we go back for 20 trading days. Same trio down here, the commodity currencies or risk-off currencies risk-on currencies as they're known, versus the risk-off currencies or safe haven plays, if you like. And that is still evident to this day. The last week, very, very much the same. CAD had a little bit better day, a little bit better week than the pound. But up the top, we've got those 2 risk-off currencies, the Swissy and the yen, holding play. That's kind of the momentum that I was talking about a little bit earlier in the piece. And I think that's worth noting because unless something changes, and I said earlier, again, that I didn't see too many changes over the week. In fact, there are 4 only currencies out of 29 that I looked at, which were indeed in a holding position versus the momentum that's being carried forward for the last week or so. So anyway, just something to note as you go into your week ahead, and other things to note going into the week ahead as we go to Singapore now and join Lloyd, the indexes per se. So let's see what Lloyd's got to say.
Hi everyone, welcome to this week analysis for the currency index. Right, so let's see what happened last week. Aussie dollar is still giving me good profits, and in fact, it's a bit messy actually at the horizontal level at 10, where you can see that price broke, retested with a high test bar, and then actually went in, got my TP, take profit at 3:1. Now Kiwi Yen, I believe I'm still in this trade, have yet to actually take profits. Yeah, but price is just about slightly away from my actual take profit level. Yeah, hopefully with the opening Monday, I will be able to get it. Now for the upcoming week ahead, most of my analysis didn't change much, but what's surprising is that the commodity currencies actually have a breakout. Yeah, so we can actually make use of that. Now yen, as per last week, I said that it has formed a very, very beautiful one, my favorite price action, engulfing test bar. And it actually closes successfully above the horizontal level. So for the upcoming ahead, I'm pretty bullish about yen. Yeah, hopefully can get into a few more positions. So this is actually the top of my list for being a bullish pair. Next come will be actually dollar, the dollar index. Well, price didn't actually test 95 levels, but after a bullish run, you can see that price is consolidating. What comes next usually should be another form of breakout. Yeah, so let's see, kind of similar to this behavior over here. So we shall see whether that will actually continue for the dollar index. The Swiss index, I'll be staying out of the Swiss index for this upcoming year ahead. Although I still hold my view that price is going to be sloping down, but there doesn't seem to be any form of dramatic action. Aussie, it has breakdown, and like I mentioned, it has given me pretty good profits for the past few weeks, but now seems that price has come to a level $17. Let's take a break and see whether price will actually successfully break this level. If it does, then we can actually continue the downward trading of shorting any Aussie pairs. The Canadian index, previously I classified that price for this Canadian index is in a range. Price has successfully actually break down the range. Now, coming week ahead on Monday especially, it will be interesting to see if on the lower time frame price will do a break and retest of this level. If it does, then it does warrant a short trade for any Canadian currency. Now, the Euro has made a very beautiful break and retest, so this also warrants for a short trade against the Euro. Not against the Euro, sorry, with the Euro. British pound, again, this is a breakout trade. It didn't perform any sort of retest in this level. Yeah. So it seems like the bearish momentum is strong with this pair, so I'll be finding any opportunity to trade this for a short. And the last is actually Kiwi. Again, the commodity seems to actually break quite a fair bit. Yeah, so this is quite a bearish break. So, and it seems to be the most bearish of them all. So I should be looking for any trading opportunities. Now, for coming week ahead, I'm looking to actually put in additional position for Kiwi Yen. By the time I actually put in, I should have TP1 from here. So again, a break and retest. If it happens, I'll be very happy to get in. The next currency that I'm looking out to trade will be actually the pound dollar. So you can see that it has been sloping down for quite some time already. So again, this level will be a break and retest will be something that I'll be interested to get in. Yeah, so these are the two pairs I'll be keeping a lookout for the upcoming ahead, and let's see if they actually set up.
Awesome, Lloyd. Thank you so much. As always, the insights into what the indexes are doing, I think, are very, very helpful because really what he's actually saying is the relative strength, well, in my opinion, that's what he's saying, the relative strength, it can be gauged by whether we're at support or resistance in a currency or a currency index versus one that's at support or resistance in another. And if it's trending, obviously that helps as well. But I like to get that little bit of a fix on what's going on. Did I share my screen? I think I did. I just want to have a quick look at the non-farm employment change, formerly known as the non-farm payroll. Way less than expected. Interesting figure, however, was also a miss on the average hourly earnings, which of course is wages. The unemployment rate, however, did fall. So I don't know that there was a massive reaction to that, to be honest, in most of the currency pairs I've looked at, except for the momentum, as I said before, has continued or seemingly so in most of the pairs. Upcoming this week, we have a couple of interest rate statements. The RBA, or Australian Reserve Bank, will do same on Tuesday. And of course, the forecast for nothing to happen there. They still maintain that D.1 is applicable or apt, if you like, in this current climate. And I don't think anybody's forecasting that will change, nor will their stance. Perhaps a little bit of tapering maybe, don't know. And of course, the Canadian Reserve Bank will do exactly the same thing on the very next day, Wednesday. And both of those currencies, of course, that we did point out earlier, are suffering under the weight of, in my opinion, the risk-off sentiment that we're seeing in the currency or the Forex markets at the moment. So interesting numbers there. If they can actually rally their troops by their statements, we shall see. We may even get an opinion on that out of our next guest from the USA. And he, as always, will have a look at the S&P 500 and various other indexes and currencies perhaps as well. Very, very good day to Gordon.
Hi, Gordon Scott here with a weekend update for December 4th and 5th. The markets will open on December 6th, and they might start buying up a little bit, but I think they're going to keep going down for a little while. However, I think also that there's going to be a ferocious Santa Claus rally this year. At some point, wherever the markets find support, there's going to be a real big opportunity for the next 4 to 6 weeks from the time it starts going up. That is U.S. stocks. But I don't think that's this week, and that's the key point. If you look at what's going on in the markets, you see that if we look up here at this chart, what we see is 3 charts going down and 1 chart going up. Stocks are going down. Gold is going down. Oil, the price of oil is going down. So that is stocks and commodities are both going down. But what is going up is bond prices, not interest rates, which are, the opposite. They're going down, but bond prices are going up. Now, this is counterintuitive because if the Fed is going to stop buying bonds and other securities, then why are bond prices going up? The answer is that bonds allow predictable income and stocks and commodities do not. If in fact we were going to see continuing inflation, then we should see commodities going up. We're not seeing that. We're seeing commodities go down. We're also seeing stocks go down. So really what's going on here is people are worried that the market is going to become less effective at delivering returns. And so they're looking for something that has a bit of a predictable return. They're not buying utility stocks, though, which tells me that it's not a full market panic. It's more like just a rotation, meaning that stuff's going to dip down for a while, who knows, a week or 2. But then at some point, once support is found, it will probably rise back up very strongly. That's my expectation. So what will that mean for other instruments, like, for instance, the Aussie yen? Well, the Aussie yen is likely to do something similar, find some support. It's interesting how close the yen is to support right now, but I'm expecting that it will break through that support before it turns around and comes back up. I think also, if you're looking at the US dollar, you've got the same kind of thing going on, right? Because people are expecting Australian dollar to weaken compared to the US dollar and compared to the yen, which means that we're probably going to be seeing some decreased interest rates in the Australian dollar. And then we've got the Euro USD, and this has been trending down for a while. And I don't see this huge reversal right here, right? What all of these things talking about going down and commodities going down, that's the U.S. dollar going up. So here's a potential possibility, I think, for the euro for people to get ready to short the euro, because I think it might take a week, but it will probably resume its downward trend. That'd be my guess. And those will be driven. Now there might be other factors which will drive it up, but those are driving those currency prices down. I mean, those currency prices are getting driven down because stocks are getting driven down because people are expecting the Fed to do things that are going to they're going to stop propping up the market. They're going to reduce, they're going to taper their bond buying activities. It's a bit counterintuitive, though. Why are people buying bonds, right? Again, it's because they want predictability, and the markets may become unpredictable. That is really being seen easily with the VIX right now. If you look at what the VIX did, see how it's got up above, it got to 28, came back down. Now it's back up and closed above 30 on Friday. It was way up there at 35, but it came back down, still held above 30. So I think that we have not seen the high of the VIX. There's more to come there. And that's it for the week of upcoming 12/6, December 6. If you want to check out what stock to trade, 30 minutes after the market, or just as the market opens, for the first 30 minutes of the markets, we will be ready at that time at the opening of the U.S. markets on Monday. See you then.
Awesome. Thank you very much indeed to Gordon, who always has interesting things to say, and there's a little bit of correlation that he picked up there as well. Look, back to me now for my overview of the currency technicals. And seriously, as I said before, the major thing I look for on a Sunday is something that tweaks my interest, in particular those currency pairs that look like they might even reverse from their week of whatever they've done. In most cases this week, that has not been evident, and we've seen momentum continue in a lot of these currency pairs. For instance, what am I looking at there? Aussie CAD. Now, a bit of a breakout of the previous range. We are yet to know whether that is going to be followed through, or whether it's going to come back and retest that breakout level, or indeed whether it goes back into range. Can't answer that question, but it's always nice to look at that scenario and see what happens when the market opens and early in the week, whether they are willing to go on with the job or not. You probably get that in your normal systems, however you trade the market, whatever you're looking for there in terms of a setup. I would be looking for, in this case, price to come back and retest that breakout level, or indeed fail to get back to there, and either one would give me an indication that there's something to look for. That's going to be the case with a lot of these pairs, the ones that have carried momentum through the week or through last week. But there are four that have tweaked my interest. The first of them is pound CAD. Now, pound CAD will be subject during midweek to whatever the Bank of Canada says in their statement. And of course, we'll be looking at that closely, as we will if you're thinking of trading these pairs that have got CAD in them in particular, what the oil price will do. Now, there is, in my opinion, a nice support level from a technical point of view on oil at the moment. That's the oil chart that I'm looking at. And it's got recent, if you like, support in this area. You can see it came off that low on or towards the end of the week, and it has got good form throughout here as resistance in the past. So I've got every reason to suspect that we'll get a little bit of buying coming in here, whether it's sufficient to drag it back. And if Ash was looking at this chart, he'd probably say, okay, we're going to get a right shoulder form up here. I'm okay with that. I'll be looking for signs that that will be the case, and that should give the CAD a little bit of respite to the poor performance that it has had over the past week or so, past few weeks. Not directly because of oil, but there have been, well, I think there was one bad figure against, might have been the CPI figure with the CAD, I'm not sure. But primarily, I don't mind the CAD. I think the CAD's in good shape longer term. It's just this uncertainty in the market at the moment, perhaps because of the 15th letter of the Greek alphabet. I'm not too sure, to be fair. Anyway, let's go back to that. And what I'd be seeking to do, you can see last week's candle was an absolute doji bar at the monthly pivot level and form support level. So it's not giving us any hint really as to what's going to happen next. Yet, if I drill down a little bit, I see this rising channel, or ascending channel. We appear to have bounced off the bottom of it. We appear to have closed above the pivots on Friday's bar. I would be thinking maybe a little bit more upside for this pair, maybe to take on the highs. Again, if Ash were here, he'd probably see a left shoulder ahead and a right shoulder here. That is a little bit complex, I must say. But it does appear to me as though the next direction is going to be taking on these highs. And if we can get up to here, maybe that level around about the 172.30 mark, I think that would be enough to get out of this pair before the next move, which is probably going to be in the opposite direction. We shall see. Now, there was a little bit of talk about the euro versus the dollar. Euro versus the dollar is in a spot that I find is intriguing. 113.60 is one of the levels that I used to trade. It's seemingly every day. If I was above 113.60, I'll be trading back to it. This is on 30-minute charts I'm talking about, and I'm not trading 30-minute charts per se at the moment, but it's a level that this market remembers. And if we go back in time to global financial crisis, even when we started to see a big fall in this market, going back to here, and we went into a strong trend. And then, of course, we had a funny thing called Brexit that came into our lives. And this level that I'm talking about, 113.60, and of course, there's a cloud of a price. It's somewhere between 114 and 130. But it spent forever under this level and couldn't break through it. Just couldn't think I can. And eventually it did. And I can't remember what drove it up there from a fundamental perspective, but it didn't stay there too long, came back to it, consolidated on it, then got back underneath it and found it very, very difficult to get there again. And then we have been back above that level in 2020, 2021, has seen a big decline again in euro versus dollar back to that level. We smashed through it, surprisingly to me. I thought we might bounce off it, but we smashed through it last month in November, and currently we are retesting that level. I think, as maybe Lloyd pointed out, not sure, I think it was Lloyd anyway, we are now retesting that level, have retested that level and rejected it twice on the weekly chart, and it's more evident there on the daily chart. I'm not sure we're going to bounce off that anytime soon. This current price action is suggesting to me, and so is the fundamental aspect of what's going on at the moment, suggesting to me that we're going to hang around here for a little bit. Where that weekly pivot was last week, can't see it moving too far, probably just up to here somewhere maybe. I think we're going to bounce in this area for a little bit yet before we go too far. So during the week, I'll be looking to trade this maybe on a 4-hour chart as a range trade in between the two pivots, if you like, monthly pivot, weekly pivot. I think if we can get down to the bottom here and find ourselves higher lows, we can trade it fairly confidently back towards the top. And if we get up to the top, round about the monthly pivot area or these highs, then I think if we look for lower highs, we can successfully trade it back into that range. So probably smaller time frames, 4-hour and less. Swissy yen on the weekly chart was, again, the other or the third of the four that had not yielded to momentum, and again put in a big doji bar pretty much on that monthly pivot, but also importantly on the highs here in June. So this is probably in a pivotal point, I'll put it that way. Again, I don't see too much to get enthused about. That candle there's interesting because it's come off the top of this range again, but the range is tightening, and I think you'd be, again, drilling down into the 4-hour charts and the 30-minute charts to find bounces off the top, lower highs, bounces off the bottom, higher lows, and trade it that way. So I think that theme will be pretty much my go-to for the week ahead on these four pairs. The others that have got that momentum carried forward from the 2-3 weeks previous or prior, to my mind, are going to be a little bit more difficult, or you may have to wait a little bit longer to find out whether that momentum will change this week or otherwise. I'm seeing no sign of that, I've got to say. The last of them is this one, Aussie Kiwi. Aussie Kiwi pretty much travel together against the US dollar, so you'd find it very, very difficult to get a guide as to relative strength there. But, and rather, not so much, but the chart's telling me pretty much that the market has no idea what happens next with this pair either, to be honest. I do see a double rejection of the monthly pivot here, but this candle, if it were to be more or pointed, if you like, or if it was giving me a better directional bias, or if it is giving me a better directional bias, it's probably not short, because it failed to get, well, it's probably 50% into the body of that candle. But I would like to have seen that fully engulf it before I would think, okay, this is headed short again. So I'm probably biased to the upside here. Whether I can actually find a way to trade that is another story, but there is, in my mind, a range forming in here inside the 4-hour chart, or the daily chart, sorry, and we've come off the top. So I'd be waiting to hit the bottom here, test that low, then look for a higher low to trade it back to this level, and subsequent to or what I've previously said about range trading, that's probably where I'll be going with this one as well. So directional bias, not easy with the currency pairs, in my humble opinion, this week. But if you can identify the ranges and find, pardon me, tops or bottoms of those ranges and look for those lower highs or higher lows bouncing off either direction. I think you probably do okay on the smaller time frames. But risk off is and I do believe that you need to probably just hold that risk factor back a little bit until the market becomes just a little bit clearer in these currency pairs. Okay, the one thing that is clear is we are now out of time. And as always, my thanks to those of you who have turned up to listen to our points of view that will carry us into the week. Thank you very much. Thanks to the presenters, as always, who give their time on a Sunday evening, as I have done. It's beer o'clock. Got to see you later.